Hi, everyone. Welcome to September's Live. Thanks, everybody, for joining us today. My name is Amanda Beren. I may have spoken to some of you in the past. I manage our account managers here at CorpNet. Um, I have about 20 plus years experience in this industry, so I'm very happy to be talking to you guys today. I want to thank all of our CorpNet partners for joining our event. It's great to see everyone here, and welcome to anyone new. Hopefully this webinar is helpful. If anyone has any questions about this or our partner program, just let me know. We'd love to welcome any new partners or go over any additional products or questions with our existing partners. For this month's live, we're doing a deep dive into LLCs. The LLC is the most popular entity choice among small business owners or entrepreneurs or anyone really. So we're taking time today to get into detail on aspects of the entity so you can best educate your clients on them. Fun fact before we get started, the first corporation was formed in the US. The first US corporation was formed in 1813. The LLC actually wasn't invented until 1977. So even though LLCs are 160 plus years younger than corporations, they've grown to be one of the most formed business structures out of them all. So it's really interesting. So on that note, we will get started. We have the slides here up in front of us. So basically, let's start out with our types of LLCs and what is an LLC. So an LLC is an abbreviation for limited liability company. So a lot of people get this confused with limited liability corporation. It's a very, very common confusion, but it's actually limited liability company. So a limited liability company is a business structure formed under specific state statutes. So all states have LLCs now. So there's no states that don't offer LLCs. This formal business structure is the simplest to form and maintain. So by simple, there's less maintenance as far as annual compliance. The way that it's maintained and the way that it's operated is very similar to a sole proprietorship or a partnership. So an LLC is a hybrid of a partnership and a corporation. So you have the benefits of a sole proprietorship and the liability protection of a corporation. It is a separate legal entity from its owners or members. So members in an LLC are the owners versus shareholders to a corporation. So even though a lot of LLCs are taxed as a single member or a sole proprietor, it does have separate liability protection. It's a completely separate entity. The main benefit is the name suggests limiting liability of the owners. So you're taking a sole proprietorship or a partnership, for example, separating it from the owners and giving the owners liability protection. So an LLC is basically just like a glorified sole proprietorship partnership. The other advantages is that profits are taxed as personal income, and this is usually lower than what corporations pay. So self-employment tax versus corporate income tax, that's really the main difference by default. So benefits of forming an LLC, first thing is simplicity. So the business registration paperwork to form an LLC is minimal, as are ongoing filing requirements. So for example, an LLC does not have to maintain annual meeting minutes like corporations do. They can if they want, but they don't have to. It's not a requirement. Also, a lot of states have possibly like a biennial annual report filing versus corporations. A lot of times it's an annual filing. So simplicity, then we have personal liability protection. So because an LLC is considered a separate legal entity from its members, its financial and legal responsibilities are also its own. So basically, Since it's a separate entity, you're looking at a completely separate debt, separate financial responsibilities. It's its own separate person from the owners, very similar to a corporation. Financing and credit. So financing can be easier to obtain because the LLC is a formal legal entity with known assets and obligations. A lot of times, sole proprietors, partnerships can have a hard time getting business financing because they're going off of a personal guarantor for themselves as an entrepreneur. So having an LLC can kind of give you a little bit more legitimacy in the eyes of the banks. So tax treatment options. So by default, an LLC is considered to be a disregarded entity, which is basically just a sole proprietorship. The reason they call it a disregarded entity is because a single member LLC is taxed identical to a sole proprietorship. So in the eyes of the IRS, it's disregarded as an entity. So by default, single member LLCs are taxed as disregarded entities for tax purposes, as well as partnerships. So for multi-member LLCs, they're by default taxed as partnerships. Some states that have community property, depending on where the LLC is located, for example, if it's a husband and wife, it might be taxed as a sole proprietorship. It might be taxed as a partnership, depending on where you live and if that state has community property or not. So management flexibility. An LLC may be either member managed or manager managed. So what this is member managed is owner operated. Manager managed is you have someone else managing the company. So if I have an LLC, I own the LLC, but I don't know anything about the day-to-day. Maybe I'm opening up a restaurant, don't have any experience in the food industry, but John does. And John knows everything about the industry. So I'm going to hire John to manage my entity. He has the same powers to open up bank accounts, to pull permits, to get business licenses. He just can't change anything within the actual business structure. So I'm going to do manager managed LLC, and I will just be the member. Most of the time, LLCs are member managed, which is just owner operated. Personal liability protection. So your LLC's debts, your LLC's creditors can go after your LLC's bank accounts and other property, but they can't touch your personal property, such as your personal bank accounts, home, and car loan. So again, completely separate entity from yourself as an individual, very similar to corporation. Same type of liability protection. Actions of LLC co-owners and employees. So the owner or employee who committed the act might also be personally liable for his or her actions, but a co-owner of the LLC who was not involved in the act or wrongdoing would not be. This is very similar to just a basic partnership. A lot of times multi-member LLCs will, of course, have the operating agreement for the LLCs, but the individuals who own the company may also have a internal partnership agreement. But it basically separates everyone and protects everyone from anything that happens to the LLC and also from each other. So your own actions related to the business. Forming an LLC will not protect you against personal liability from your own negligence, malpractice, or other wrongdoings that you committed related to your business. So if you do something that causes the business to be sued or to sue you, you're not protected from someone personally suing you as an individual. It will protect any type of assets or anything like that that you own outside of any type of business matters, but you are limited with the type of liability that you're going up against. So you and any type of partners. Other members' personal debts. So an LLC's money or property cannot be taken by creditors of an LLC's owner to satisfy personal debts against the owner. So if you have any type of personal debt, let's say your partner has personal debt, they can't come after your business for any type of debts that either of you own personally. So again, separate entity, separate liability, separate everything. So LLC structures. So we will get into this again. So single member LLCs versus multi-member LLCs. So single member LLCs are basically just sole proprietorships with liability protection. Multi-member LLCs are essentially just partnerships with liability protection. So again, by default, a single member LLC would be taxed as a sole proprietorship. A multi-member LLC in most cases would be taxed as a partnership. Depending on what state the LLC is in and where the owners live. If it's a husband and wife, sometimes it'll be taxed as a sole proprietorship, sometimes it'll be taxed as a partnership, depending on if the state has community property or not. Manager managed LLCs. So you have member managed versus manager managed. So member managed, owner operated, manager managed, non-owner operated. So you still have members within the company. Of course, you still have owners, but there is someone else, an outside party that is managing the company for you. This can also be done by one of the partners. So let's just say me and my business partner own a company together. The business is taxed as a partnership. I'm not familiar with the industry. I don't really want to do any of the day-to-day stuff. He knows more than me when it comes to the industry and the day-to-day operations. So he's going to be a managing member. I'm going to be just a member. So in this case, it would be manager managed because you have a managing member managing the day-to-day operations versus the an outside person who would just be a manager. So a non-owner manager would just be a manager. Domestic versus foreign. So a domestic entity, there has to be a domestic entity with every LLC. You've got the domestic, which would be the home state. So let's just say you decide to set up an LLC in Delaware. You don't live in Delaware, so you are going to basically register the business in the state where the business is operating out of. That would be your foreign state. LLC versus PLLC. So LLC versus professional LLC. So some states offer professional LLCs. So this would be for doctors, lawyers, accountants, dentists, chiropractors. So some states do offer professional LLCs. Most states offer professional LLCs now, but not all states. Definitely easier to manage, but the issue with the PLLCs is if you're planning on operating in other states, not all states offer PLLCs. So there's a bit of a hiccup there. But we'll get started with single member LLCs. Very, very simple. Again, a single member LLC is just a glorified sole proprietorship. So a single member LLC has one owner with full control over the company. The management would be the single member, the sole owner who's considered the member and manager because they're operating the business. This person also has any type of personal asset protection. So personal assets are protected. The owners might be held personally liable, personally responsible in situations such as fraud or unpaid debt that has to do with the business, but nothing outside of the business. Any type of personal debt is kept separate. Income tax treatment. So for federal income tax purposes, a single member LLC is treated as a sole proprietor. So nothing changes from yourself, your personal taxes with self-employment once you form an LLC. IRS refers to single member LLCs as disregarded entities in that the LLC is disregarded and the LLC activities are reported on your Schedule C, E, F, or F. So nothing changes, literally. IRS disregards single member LLCs for tax purposes. For example, in a rental property, the single member reports the income on the Schedule E Form 1040 if an LLC or not. Compliance, a single member LLC will have less complex requirements, so less compliance annually, tax purposes for income tax, federal and state usually. Multi-member LLCs have 2 or more owners or members that share control. So owners of a multi-member LLC must decide if they would like the business to be member managed or manager managed. So this is something that does need to be decided prior to the LLC being registered. This is something that we designate actually on the documents that we file with the Secretary of State when we're processing this for you. So prior to setting up the LLC, these types of decisions need to be made. It's a very just as important as the company name. So we need to know once we're setting it up. Personal asset protection. The multi-member LLC protects owners' personal assets. However, owners might be held personally liable, again, responsible in some situations such as fraud or unpaid debt. Income tax treatment. For federal income tax purposes, a multi-member LLC is treated as a partnership. So by default, partnership. Again, certain states, if you have community property as a married couple, it might change. Once we get the EIN, we are usually notified immediately on what type of tax treatment you're going to get. So member managed versus manager managed. A member managed LLC is used when all members participate in running the business, hence the owner operated. So Susan and John have an LLC together. They both participate in the day-to-day operations. They are both members and owners. This company is member managed. A manager managed LLC is used when only certain members, designated non-members, or a combination of the two handle running the business. So Susan and John are the owners. John wants to operate the company. Susan just wants to invest and be a silent partner. This is a manager managed LLC. Susan is a member. John is a managing member. Most multi-member LLCs choose the member managed option. So most of the time when an LLC is registered or started and it's a multi-member, all members are usually running the company. That's usually just how it's done. On occasion, you can have a multi-member LLC and you also want to designate somebody who will have the same type of access and powers to pull permits, get business licenses, set up bank accounts, be signer on bank accounts. So you can also do a manager managed LLC, even if all of the members run the company, but you also have this additional person who you want to be a part of running the day-to-days. Most states consider an LLC to be member managed unless specified on the company's articles of organization. So again, this is something that we need to know when the LLC is being set up. So who's going to manage the company? Is this member managed? Is this manager managed? If this is changed afterwards, so let's say your client calls you, wants to set up an LLC, let's just do member managed for right now. I don't know what's going to happen. We're looking for some help to help us with running the day-to-day. 2 weeks later, they call you, okay, we found somebody, let's get them added on. An actual amendment would need to be done with the state to change this. So it's part of the filing. So it's always good to know prior. But again, things change, we can always fix it. For manager managed, for manager managed LLCs, an LLC's articles of organization must specify that it will operate as a manager managed, and it should have an operating agreement that defines the roles and responsibilities of its managers and members. So in all of our packages, not all of our packages, most of our packages, especially for partners, it includes a custom operating agreement. So the custom operating agreement that we do for your clients, it will define whether or not the company is member managed, manager managed. It will have all of the boilerplate information and state specific statutes that's required to go into the operating agreement. However, it won't have specifics that pertain to the partners. So for example, if there's anything that they want to add that has to do with their individual partnership, they absolutely can. We send you the operating agreement in Word format and it can be edited if you need it to be. A lot of times partners will have a separate partnership agreement with their individual relationship outside of the LLC. That can be added with the operating agreement, but unfortunately, we can't do partnership agreements. It's kind of crossing the legal lines for us, but we absolutely take care of the operating agreement. So domestic versus foreign, we'll get into this a little bit more. So you have a domestic LLC, that's the state where the LLC is registered. So that's the state where the LLC is born. So I set up my LLC in Delaware for whatever reason, tax purposes, privacy. I now have a Delaware LLC. I live in California. I operate my business out of California. California is going to require me to register my business in California in order to operate. So I can't pull any type of permits, licenses, I can't sign a lease, I can't really do much in California without registering the business. So once I register the business in California, it's called a foreign qualification. So I am now domestic in Delaware, foreign in California. Foreign in this aspect does not mean out of the country. It just means in a different state where the business is registered. A company which is registered as a LLC in Michigan and which does business in Michigan is operating as a domestic LLC. So if you're doing business in the state where you're registered, you're a domestic LLC, nothing to register. If the same company is doing business in Illinois as well, with a physical presence, it's operating as a foreign LLC in the other state. So going back to my LLC, registered in Delaware, doing business in California, I'm operating in California as a foreign LLC. This commonly comes up when LLCs are formed in states with business-friendly tax laws, but do business in their home state that's maybe not as tax friendly. It may also occur when a business starts expanding into other states. So for example, I open a business, I am operating in California. I want to open up a separate location in Nevada and Arizona. I don't have to set up a whole separate LLC unless I want the businesses to be completely separate with separate EIN numbers and everything. I would just foreign qualify in these states. So it's one business doing business in multiple states. So same EIN, same everything, just separate state registrations. Domestic in one state, foreign in the other states. A foreign LLC is required to register with the Secretary of State in the foreign state. This also goes for compliance too. So the more states that a business registers in, the more compliance it will have. So if I'm a Delaware LLC, foreign qualified in California and Nevada, I'm now responsible on a yearly basis, or depending on the state, might be biennial, to comply with state requirements for Delaware, California, and Nevada. So any type of state compliance, you'll then be responsible for there. Let's see here. Okay, so LLC versus PLLC. So a PLLC is a professional limited liability company. This is the doctors, the dentists, the lawyers, the accountants, the chiropractors. These are people with a professional state license that they need to maintain under an entity that has specific state requirements. So these entities exist in states that require LLCs composed of these license holders. They do differ from regular LLCs in the fact that they are held at a higher standard. You have separate state statutes saying that someone can't be a 50% owner in your business unless they are also a medical professional or a CPA or a lawyer. So there's specific rules. Some states won't even allow an LLC to have a manager that's not a license holder. Um, Again, every state is different. They have different laws, and not all states do PLLCs. It's kind of a newer thing that the states are adding. So a lot of them do have it now, but one thing I always warn people is if you are planning on doing business in multiple states, just make sure that the state that you're looking to also do business in does PLLCs. Difficulties arise when a licensed member dies, loses their license, or wishes to exit the PLLC. In some cases, the company has to be dissolved and perhaps recreated. Transfer of ownership in a sale may also have restrictions on a state level. So, although it's taxed and treated as sole proprietorship, partnership, state-wise and internally, there's more to it because they, again, are held at a higher standard with the state statutes. There's professional licenses involved. So S corporation versus LLC. The eligibility requirement to become an S corporation, shareholder are restrictive than those of an LLC. So to elect tax treatment as an S corp, an LLC must be a domestic company, meaning within the US, with owners who are individuals, certain trusts, or estates. Partnerships, corporations, non-resident aliens may not be the S corp shareholders. So another corporation cannot be a shareholder of an S corporation. A partnership cannot be a shareholder of an S corporation. Other restrictions of S Corp are a limit of only up to 100 shareholders and the stipulation that they issue only one class of stock. So, for example, if a corporation has common and preferred shares, that would not qualify for an S Corp. So it would just probably be common shares is the most common. So one class of stock, less than 100 shareholders. Liability protection, both the LLC and S Corp protect business owners, personal assets. However, a court might rule that the LLC members or S Corp shareholders are personally responsible for debt and legal issues of the business if they acted fraudulently, personally guaranteed business loans, or were negligent or reckless in some way that caused harm to the business, for example. Also, the S Corp is a federal election. This is not a state election. So the S Corp election would be on a federal. There's a handful of states that do state elections, but these are all federal requirements. So business income, to get paid by the business, LLC members take money out of their share of the profits to basically pay themselves. It is considered a draw, or you're paying yourself out of the profits, similar to a sole proprietorship. And S corporations, owners, shareholders who do substantial work for the S corp are considered employees and must be on payroll. So an LLC can't have employees, right? So if you're an owner of a company, an LLC, you can't pay yourself as an employee. Versus an S corp, you have to pay yourself as an employee and put yourself on payroll because S corps have payroll tax. That's what they're responsible for. By default, an LLC is considered by the IRS to be the same tax-paying entity as its owners. So LLC members are responsible for income tax and self-employment taxes, social security and Medicare on the company's profits. So any type of self-employment tax, that's what you're responsible. So by default, an LLC. So whether it's a partnership or a sole proprietorship, multi-member, single member, self-employment tax is how you're going to get taxed on anything. S Corp treatment, LLC members still have pass-through taxation. However, the owners pay Social Security and Medicare taxes on their wages and salaries from the business once they're put on payroll. Income taken as distributions is not subject to self-employment tax. So once you go S Corp, there is no more self-employment tax. You've either got payroll taxes or however you're taking your distributions. So formation and compliance. So you have your articles of organization, which are essentially the LLC's birth certificate that's filed with the state. Designate a registered agent, create an operating agreement, obtain an EIN, request foreign qualification of operating in multiple states, business licenses, sales tax, payroll tax, all the same type of business filing requirements. How can you help your clients keep their LLC compliant? So maintaining a registered agent, filing an annual report, holding meeting minutes, even though it's not required, a lot of people still like to have it, especially if they elect to be taxed as an S corporation. Renew business licenses and permits, filing any type of amendments to notify the state of any significant changes to the business. So CorpNet tools are your resources. You can find all of these on your dashboard or our website. So we have a business name search tool, interactive business structured wizard tool, which is great. I don't know if you guys have all looked at it, but definitely check it out if you haven't. CorpNet compliance portal with monitoring and proactive alerts. This is huge. No more calendaring this stuff for your clients. Annual meeting minute services, business guides and checklists, and the CorpNet blog, all of which, except for with the exception of the portal and the business structure tool, of course, we can white label these for you. So we will go ahead and start to wrap things up. I'm going to go ahead and answer a few questions. Let's see here. At what point should my client form their LLC in the startup process? So this can vary per type of business. A lot of businesses with high liability, let's just say a restaurant, a construction company, something to where someone can very easily sue you, they start from the get-go with an LLC for the liability protection. But as far as just any business, it really depends on the state and how the LLC is taxed on a state level. Some businesses find that it's not beneficial to start right away. Certain states like California, for example, have a really high state tax if they go LLC. So I just always suggest anyone speak to their accountant prior to setting up the LLC. Are the fees to form an LLC the same in each state? No, they are not. They're different in every state. There is really nothing similar about any of them. Some states are $20, some states are $500. So depending on what state you go with, the fees can vary. Some states also have like newspaper publication and things that go with LLCs to where it's a pretty big add-on. But again, we take care of all of it for you. Last one, and then we can go ahead and close out. So what form is needed to form an LLC, and is this the same across all states? So to form an LLC, it's usually articles of organization. It's also known as a certificate of formation. Some states call it certificate of formation. It depends, but it's generally the same form. With the same information, company name, registered agent, how the business is managed, member managed, manager managed. Some states ask more, like member information or business address, but for the most part, it's the same form. So, but overall, that pretty much does it. I want to thank everybody for joining us today. That wraps everything up. If there's any specific topics that you want us to cover in the future, please share with us at any time. Post on our pages and our groups, message us on social, whatever is easiest for you. And you're always welcome to reach out directly to me. And always, You're welcome to post questions anytime. Social team is here to help. We're always here to help. Next Facebook Live will be our last of the year, actually. It will be on Wednesday, November 13th at 11 a.m., where our team will share an end-of-year legal checklist so that you can prepare your clients for the start of 2025. This is a huge one, definitely worth tuning in. There's a lot of stuff to cover to the end of the year, especially with this BOI requirement that everybody needs to do. So definitely stay tuned for that one. Thank you everyone for joining us, and I will talk to you soon. Thank you so much.